Okay, today is Tuesday, July 25th, 2017. So the first thing we do in the daily routine is we will check the charts. So let's first start off with S&P 500 E-mini futures. And looks like we have a bullish inventory here. And yesterday wound up being a lot more bullish than I thought. I was actually thinking that we would be in a bear spell through here, but we got a reversal at around the right time of the day, typical reversal time of the day, and then rallied all the way back up over the highs. This is very unusual, this pattern where the chart opens, reaches the high overnight, then reaches the low overnight, and then reverses all the way back up to the high overnight. That's very, very rare. This right here, this whole first of all, a reversal here. That's not a big deal. That, you know, although this is a funny pattern, because it really didn't reverse very far from the actual open low. It was just a little ways off of the open low here. But overall, the reversal's not unusual. What is unusual is that once we got back up here in this area, it continued to rally on almost into the close, and then you got a lot of sellers right here taking profits, etc. Okay, so these were just opportunists right here, day trading, right? But normally this doesn't happen unless you've got a lot of long-term investors that are just slowly, steadily buying with their buy programs in the afternoon, right? Because for the most part, the rest of the market, we don't really move the market like this back up to here. It's just unusual. This is all very, you can see, just perfect, picture perfect stair-step trending here. This would have been a good trading session here. And so when you're trading like this, what you're reading is basically you're reading how does price bounce? How well does price bounce? Okay. At first we get a couple of tests below the support lines here, okay, and then it's working. All right, and then we get tests down, and we can't even get down to the support line now. So it's obvious that this is so bullish here that this is just levitating. they're vivid, right? So they can't get down to support. And you see that pattern over and over again, right? They're livid. They can't get down to support. They're just going to turn around and keep going higher.
See, I think it's quite possible that the 1960s represented the last burst of the human being before he was extinguished. And that this is the beginning of the rest of the.
And then when you get too close to the open, it can get pretty helter-skelter. So tend not to trade around the open if you're trading overnight, because basically that's when they're coming into their offices, and you know, they're not trading on patterns or anything like that. They're just driving trucks out to the hole in the ground and then just dumping these orders out there. They don't really care about anything. And so what you can get are traders dumping, you know, on one side bullish, and then traders dumping on the other side bearish, and this whole thing can just get whipped all over the place, and it can be for various reasons. Whereas if you're trading the mornings of the real live market here, then it tends to have more of a rhyme and reason. And that dumping is just not tolerated. It's just not tolerated. I mean, basically, you have to have a whole. You really got to have a royal flush, as in the card hand, in order to get the market to act wildly or anything like that. Because you can't move the market yourself. You could move it a little bit by yourself, but the computers are so fast. They're so massive. There's so many of us. On computer side and real side at the same time, that will compensate for any kind of little movement that you do happen to be able to make. So if you're making movements in the mornings, right, where there's so much volume, there's so much participation, you're asking yourself if you can move the whole world. And if you can't, then basically you have to play along with the market. So if you were looking, okay, let's say you were a long-term investor and you've got to play along with the market, you got to figure out, can you get prices down lower if you're buying, right? So say you've got, you know, I don't know, millions, hundreds of millions or whatever to get into the market. You've got to get the price down lower, get more in there, get more, you know, get more longs, get more money into the market, and then if you think that price can get down lower again, then that's what you've got to wait for. You have to play for that, and there's a whole system for that. They know that. They've been around long enough, and the same is true on the other side of the market. If you've got, you know, millions, 100 millions or whatever to put in the market on the sell side, whether you're selling to liquidate or you're selling to short, you've got to wait for price to get higher again too. So it's not a matter of forcing prices up or down for them at that point, but it's a matter of just you know, playing the cards right, knowing the movement of the card game and timing it right and that kind of thing, and then getting more of your position in there at the appropriate times. But as far as calling up all of the organizations and then organizing some kind of you know, a rally of some kind, I would not be surprised. But if that has ever happened, but generally, it's kind of hard to believe that, you know, that they're all going to trust each other. I mean, it could happen, but it would be very rare. So for the most part, they're just playing their P's and Q's. It's kind of like driving in the city, you know. You can time things right, and you can get all the stoplights, you know, to so that you get greens in a row, all greens in a row, and you're not waiting so long at the stoplight for the things to turn red, right? but for the most part, you can't go faster or stop, or you could stop, but I mean, if you stop, you know, if you stop, then you're not going to be there on time anyway. So, you know, so the right, you have to pace it just right. You have to measure your time just right. You've got to even measure the cars, right? So if you've got traffic in front of you or people in front of you, right? So you might get slowed down. Then you've got to speed up to compensate. If you've got, you know, if you've got to weave through traffic, right? You've got to compensate for that. Count how many cars are in front of you, how fast they're going, that kind of thing. So that's kind of what we're doing here. Kind of, you know, and I'm not even talking about you and I. I'm talking about institutional traders that are, you know, pulling and putting millions and hundreds of millions into these particular markets. That's kind of what they're doing, right? Now, if they're doing, like, okay, let's say they've got a big sell order and the price ran up overnight. Well, that's an opportunity for them. They could get rid of a whole lot of those sell orders because prices already ran up, and they might just sell this thing all the way down. But if it's a lot of buy orders and the prices already ran up, they might buy some like this right here, and then on the open, they're going to be looking for lower prices. They're going to be hoping for lower prices, probably, right? If they've got all day to get that order in, yeah, they're going to be hoping for lower prices. So pole position. It's just pole position for them. Now the thing is, though, is when they're playing pole position in the morning, there's not very much volume. You can see here, there's not much volume, but you can see as the open gets closer, right, the volume kicks up pretty high. This particular bar right here especially, right, so somebody really dumped out right there. And then you can see as when the open kicks in, you know, those first few bars they have extreme volume, and then it kind of, you know, kind of keels over. You'll get another burst, and then slowly but surely the volume just kind of tapers off, basically back down to about this stuff right here. So around that open area is where the most action is at. Now the thing is, though, is that right around the open, like just around the open, just before the open, and just after the open, that's like an economics report or something, you know, or earnings report, right? When it hits the market, it's very volatile. It'll swing high, it'll swing low, and then it'll find somewhere in between or whatever, and then we can start to figure out what's the thing going to do. But for the first couple bars, you can't do anything with that because there is no rhyme or reason. It's just maximum impact, you know, order pushing, and from a gallery of investors, and you have no idea really what any of that's about. Nobody does. And then the chart starts to come back out, and the only thing about this job that is actually worth any money is the ability to know that the thing is gonna move across the page, right? So there's enough trading to get the thing to move across the page. I don't know if you've ever seen illiquid markets, but illiquid markets have very few participants, and the chart price does not move across the page, right? There's just not a lot of demand for that market, so it doesn't really even need your money. It doesn't demand your money. So it'd be kind of like investing in property out in the middle of the wilderness. Sure, you can. Yeah, you can say you own it, but are you managing the land for anybody? Are you developing the land for anybody? Not really. So you invest where the demand is at, because that's what people are purchasing. So you become the manager right, with your capital, and that's why you put the capital in here. And the thing is, though, is that when there is demand in a market, right, where there's liquidity, the price movement is very predictable. It's very predictable because it's the market, or the crowd is very robust. It's very enormous, right? So if it's moving, it's going to take, planets to stop that movement. And if it is planets that stop that movement and turn that movement around, then it's like an omen. It's like a sign. Now, it's not like a sign of like the supernatural dancers from outer space have spoken, but it's probably an economic sign that the major institutions are basically saying that things ahead may not be going that way, and you have got into their price range for selling or for buying, right? So you were headed the wrong way, basically, and they took enormous advantage of that territory that you've walked into with your price. So you got so low that they just bought more and more, or your price got so high that they just sell more and more. But for the most part, the team is together on this, and that's why it's so investable, is because the team is together on this. See this area right here? This whole area? Okay. The volume is so piddly, right? There's really no volume there. And the price movements, it's just like one or two ticks. So that's the overnight between the Asian and the European market. Okay. So nobody's there. Nobody's awake. But then we kick in here at about, the open of the European markets, and then something starts happening. And so you get more investable opportunities. The thing will start to actually act right? Obviously, there's somebody watching these charts. People are watching these charts. They're seeing the cues, and they're joining each other. That's what's happening. Okay, and then throughout the actual trading session, it's the same thing. They definitely are joining each other. They're definitely watching these charts for the first few hours. And that's where the price is the best. Normally, okay. Now, it can be an oddball day, and those come up once in a while. And for those, basically, you can't be prepared. Basically, if it's going to be an oddball trading day, then basically what you have to do is you have to have a protocol in place in your system, kind of like as if you were in a nuclear, let's say like a river dam, right? So you are turning energy, right? You're the electricity producer, okay? And you've got to have a protocol for an oddball day that says that if things go awry, then basically you will pull the plug at a certain point and then test the next day to see if that hourly pattern still exists. And if so, repeat the same protocol or figure out what the pattern is, one of the two. So in other words, for me, on these trading excuse me, I'm sorry, I just woke up. On these trading sessions, so on these trading sessions, the size of account that I use for teaching is 3 contracts. I like 3 contracts. Basically, all of the institutions. If you're gonna learn how to trade for institutions online, they're gonna have you start out with 3 contracts. Okay. And they're not going to give you a whole ton of contracts because you actually need to know what's going on. The more money you've got in your account that they're going to fund you with to manage, the more that you can lose, right? So you need to start out small, and sometimes some institutions just have you start out with 1 contract, and others they'll have you start out with 3.
Everybody knows things are bad. It's a depression. Everybody's out of work or scared of losing their job. The dollar buys a nickel's worth. Banks are going to
and basically basically what the concept is that you're going to have to learn is that you can't stack all kinds of risk on your trade, on your trailer, your trading trailer, so to speak, and then fit through the tunnel with an overhead ceiling that's going to be the limit that you can lose. So if you have your trailer stacked low, right, and you drive into that tunnel, then you'll lose a little bit, and it'll be slow. You can lose slowly. Basically, as the price pushes against you, you're going into the tunnel, the losses are slow. And so you're able to control your losses. But if you have a position that is stacked high over the roof of the cab that you're driving in, okay, well, the ceiling's right above that, and basically if you run into lost territory, price is going against you as you're heading into this tunnel, then you'll automatically hit the roof, hit the ceiling, and your account will be locked down. They'll lock your account down because they have those loss measures on everybody's account, so that way you're not causing them to go broke, right? And so you have to be able to discern. First of all, you have to be able to discern where is their potential profit, right? So basically you've got to know where the team is at. Can you get into the crowd here on these charts? Can you understand the market? And then second of all, can you understand risk, the cost of risk? There's a specific like a science to it. It's a phenomenon. It's a natural phenomenon that occurs in economics. And if you can't see it, then you need to start out small, and that's why they start you out small. But if you can see it, it's obvious, because you don't lose, you steadily make money. So if you've got it all together, you know how these folks work in the charts, you see the patterns, you're on the same music page as the rest of the orchestra, so to speak, and you can assess risk, and you know your protocols. You know that once you reach so much, you just pull off trading for that day. Like, for instance, yesterday was kind of a goofy day, and I was on the wrong side of a few trades, in fact. And so I've got my protocol set that once I get to, with 3 contracts, once I get to 250, then I'm starting to look to call it off, right? And that's what happened, and then I called it off. Because whatever was going on in the market was not the typical behavior that I understand for investing. And meaning that there's no rhyme or reason that I can see in the market, so there's no reason for me to invest in it since I'm not able to see what's going on. It would be kind of like if you lived in a wintry place and all of the roads are being snowed over, okay? Basically you can't see. It's called a whiteout, right? So you can't even see the roads, so why would you invest your life and your vehicle into something like that? You're just going to wind up in a ditch, and that's what people do. And so that's exactly what I'm trying to get to here, is that if you don't have a call it off protocol, right, on a screwy day, right, you're going to be investing in something like a whiteout, and you're going to wind up in the ditch. Now, if you wind up in the ditch, that costs you already. And if it costs you that much, then obviously something is not right. I mean, you know, if you're new, right, then typically you're going to wind up in the ditch all the time. Typically, if you're new, you need to be sim trading and wind up in the ditch a lot, because you have to get used to, you know, there's no, you can't see the sides of the roads. It's kind of like trying to talk to people with sign language. You don't know, first of all, where the language is at, and until you know some people personally, like your friends, or you know them well enough spiritually, with through sign language, right? It's the same here. You have to understand this in kind of a spiritual way. You have to be able to see the mentalities of people behind these charts, and then you're going to be consistent, right? The only way you can get there is through the patterns, right? Which is basically like sign language, okay? And the only way that you actually start to see the meaning of the language patterns or the technical chart patterns is basically to trade sim and just constantly lose. You're going to trade, you're going to lose. You're going to trade, and you're going to lose. And the only way you can actually ever figure out the language is basically do some research, study other traders, see what they say, right? My videos have always got the list of traders that you study to figure out the language here, the language of the actual pro traders, not the geeks and the bookworms and the losers and the scammers. There's a lot of scammers out there lying. There's even people that actually have no idea what they're doing, and they're just lying because they want attention. There's all kinds of that junk, right? The list of guys that I've got there on my videos, they all tell you exactly how the market is tradable, how it's an investable market, and it's not some kind of, you know, it's not some kind of like a kid show or something, you know. It's a real serious market, and here's how you read it. Here's what the people are doing behind it, just like them, okay? And they even tell you where all of the losers and the scammers basically get you into trouble, and that happens to be where we get paid the most, in fact. So it's on the, basically it's on the inside of the two-way mirror looking out, rather than being on the outside of the two-way mirror and having no idea that you're being watched. Basically, that's basically what it comes down to. But it's you that put yourself inside of that two-way mirror, right, with the rest of us, okay? And basically, if you've done your research, right, and then you've figured out, you know, the times of the day, when things are good or when things are bad, right, when's the market thicker, when's the market too thin, when's the most investable time of day, what markets are most investable, why, what time of the year is most investable, why, then basically you know when the patterns are so screwy that it's basically like a whiteout, and you're not going to be able to make anything on it. You're just not, right? And the thing is that at that point, when you're that good, or you know how to do your job that well, because this is your job, right? Then basically, if you hit the ditch a couple of times, it's probably because there's not a real pattern. There's no pattern, right? Something's off that day. So, and you don't know it's off. You're just trading per the cues on the chart, just like a normal trader. Okay. Now, if you traded a couple hours later and you looked back, you would be able to see that, oh, okay, yeah, so it was one of those days. It's a funny trading pattern. Okay. So I wouldn't have traded that. You know, I would have gotten caught off guard, but that's not how it works. You start out trading, you don't know that it's going to be a funny trading pattern day. And then you find out, because that's just how it goes. Because normally when you're trading to take advantage of the unknown, but the fairly predictable, right? That's your job as a money capital distributor, right? Yeah. So, and then if you've hit the ditch too many times, you got to say, well, that's it. That's enough. It's one of them days, so I gotta go. Now, you could trade sim the rest of the day and see what it's like, yeah, but a lot of people, you know, they've been doing this for so long, they already know what it's like, right? So they just don't bother with it. Those people will just turn it off and come back the next day, see if it pans out, see if we get back on track here, see if the storm clears, and then we'll just all start trading again. And I guarantee you, now, if you've ever been like in I don't know, a school convention, right? Anything like a sports game, maybe a play, a school play, maybe like a bake-off kind of thing, parents and teachers meeting each other or something like that. Any of those kinds of things, right? Or church, or voting, right? The elections, barbecue sessions, or maybe sports sessions for the workplace, that kind of thing, right? You basically know how it goes. There's a lot of people there. You've got a parameter of things that you can do, and then there's you can't do. You can't, you know what I mean? You know what's socially norm, and you know what's legal. I mean, you know, so you stay within those parameters, okay? And basically, you know how things go. You know the process of how things go. Well, that's how it's going to be in these charts, or in these markets, right? The crowds in here are exactly the same thing. They all just meet. Okay, this is a big meeting. This is kind of like, I don't know, think about it like a UN meeting. Now, I'm not a fan of the UN. I think they're garbage. But the thing is, though, is think about it like that. Okay, you've got a big place. Everybody gets together in the place, okay, and they've all got these translators so they can understand each other, right? Well, these charts are our translators. Okay. That's all this is. The message here is on the charts from everybody else, and they're all understanding it. So the thing is, at those meetings, right, foreign leader meetings, they're all understanding each other, okay? But they're all speaking different languages. It's basically the same thing here. So there is a procession here. There is a rendezvous. There's a collaboration of people coming together here. That is what you have to see. You got to see it more than stupid sticks in red and green on a chart and some lines. It's not. If that's what you think this is, okay, then you're not getting it. You're not in. You're on the outside of the two-way mirror, and we're looking at you, and we're profiting, and you're losing, consistently losing. Okay. But if you're seeing that this is a social, it's a social event. Economics is a social event. Everything you do in economics, from working to buying things, from brokering things as a retailer of any kind, whether you're retailing futures or stocks, or you're retailing candies in a candy store, okay, it's all a social event. Social expressions, okay? That's what it all is. And as much as people think, oh, well, I can detach myself from the social side of things in this very technical thing here, you can't. People maybe want to do that, but they can't, because this is an extremely social, it's economics. It's the epitome of social expressionism. I mean, and it's the largest one, right? I mean, it's the entire globe going on here. So it's very meaningful, and the thing is, if you're not understanding the meaning of what these patterns are saying, I mean, if you're new to this, basically you're like, okay, well, I got a Fibonacci, and I got I got levels. I got the support level. I got the resistance level. I got the trend lines. What else? The head and shoulders, the cup and handle, the double top, the double bottom, etc., etc. Right? That's all fine and dandy to start learning, but eventually you're going to have to come through and see that there's a whole world of people behind this thing, and the reason that those patterns do or don't work, when they do work and they don't work, is because there's more going on with the people on the other side of these charts. And that's the main thing, okay? So that's what I repeat over and over and over to my students, is that this is more than a stupid electronic gadget. This is a bunch of people. Now, you can understand things with our electronic gadget. That's good. Yes, that's your translation, right? So here you go. Here's a line. Here's a trend line, right? Now, what does that mean, though? What is that? What are people saying that cause this correlation between these prices, or these candles and these prices? Why do we use candles instead of using every single ticky on, in the market change, and then put all that together? Why? What is the volume saying? Or what is it not saying? You've got to know both. What is it saying and what is it not saying? What's possible and what's impossible after that? What is most likely after that, and why is it most likely? Right? It's not a math problem. I mean, because you can be all technical all you want, you know, and you can turn this into a math problem, but at the end of the day, all that math, you know, all that technical jargon that you were using worked or didn't work. And that's the hard thing to understand about trading at first, is that all that stuff is not there to tell you exactly what the chart is going to do. All that stuff is there to tell you and everybody else at the same time what the crowd is thinking. Okay? So if the pattern worked, the crowd says one thing. If the pattern didn't work, then the crowd is saying another thing, and that's basically all there is. From pattern to pattern to pattern. It worked or it didn't work. It worked or it didn't work. It worked or it didn't work. Okay? And there's messages all throughout there. You've got to be able to interpret those messages. Then you're investing. Then you are investing. Otherwise, you're playing a video game and you don't have any idea why the pattern would ever work in the first place, or why it wouldn't work in the first place. If you can't understand those things, okay, the why, then you can't understand how to make money consistently. I mean, in terms of, like, if I was teaching you an economics class, I would be teaching you things in terms of risk, the cost of risk. If you can't understand that when you open a store and people don't want to buy camel urine, you know, because people in this country that we're in don't drink camel urine, whereas they think it's a religious energy drink in the Middle East. It's a religious energy drink, okay? And it's the ancient blend, right? And you don't even know if the store owner is the one that's pissing in the bottle, because you don't know. It's just piss, right? So the thing is, though, is if you open a store here, you know, or let's say you open a cow piss store, right? Because in India, right, the cow is the, you know, so you drink some energy drink with some cow piss in it. But the thing is, though, is you open it here, why is your store going to close, right? If you charted out the cost and the sales and the times of the day, etc., like we're doing here on these charts, the exact same thing right here on these charts, if you charted it all out, okay, what is the chart telling you? What is it a translator saying? What is it a translator telling you as a translator? Okay. It's saying that people, they tend not to buy camel or cow piss as a beverage, okay? That is from a mixed up, you know, where the kings mixed everybody up far away and long ago, right? Like over 1,000 years ago. Okay, so those poor people are still enchanted, right? So you might make some sales over there, but you certainly, and they probably won't have very much money, so you're not going to even really make a lot of money, right? So don't get your hopes up. But the thing is, though, because people like that don't have a lot of money, and you know, that just goes hand in hand, right? Foolish people don't have money. Now, the thing is, though, is that if you opened up a store here and you started selling, you know, things that people buy all the time, right? You already know that they buy these things all the time here. And you charted it all out. What is it saying? Saying one thing or another. Now you got a successful store, and then you buy a new product that is new, It's new in every store. You don't know if these people are going to buy it or not. It's either going to be a trend or a fad, or it's not going to be. It's one or the other. You don't know yet, so you're investing according to it. So reduce your risk. Don't invest in a whole ton, right? Unless you're really sure that this is really going to take off and there's no choice. This thing is going to take off. But the thing is, though, is chart it all out and see how is that going to behave on the charts. And then when you read the charts, as you're reading the charts, you know why price is rejecting certain areas on the chart. Why price is following the patterns correctly. You know. Because people are either buying the things or they are not. And based on how you are pricing your product, right, you can determine certain things with that chart. So, I mean, if the product's really cheap, then you'll probably get more acceptance, okay? If the product's more expensive, you'll probably get less acceptance. But if the product's more expensive and they're still buying, what does that say? It's very bullish. So what do you want? You want to be able to accumulate more of those things at a lower price, somehow, some way, as fast as possible, right? And since the demand is there, even with the price high, why not drop the price lower but sell a lot more and buy in bulk, right? So all of this stuff has a reason, right? And you're talking to the people. The people are not a technical indicator, okay? They're not. This is not a calculator experience, okay? This is, it's spiritual, right? They have opinion. They have willpower, okay? They will do things per their experience, per their knowledge. And you've got to be able to understand all that in order to be a successful business, anything, right? I mean, unless you're selling oil. If you're selling oil but still, you still got to get into it, because you're going to have to, you've got to be a leader of drillers. You've got to negotiate prices or whatever, and so forth. So you're still going to have to understand people, right? So, but for the most part, I mean, even the commies and the Muslims, their governments that just oppress everybody, and they don't care what people think, right? Even they can sell oil, right? But they can't sell. They're not good marketers. They're not people that come up with things for people that people want. That's not their style. They come up with things that people don't want. That's all they're about. Any kind of challenge that the people give, or interest, right? They're going to attack it. They're going to tackle it. They're going to try to, figure out how to manipulate it, how to maybe harness it, like people were like some kind of energy power for themselves, and then anybody who wants to stop that or thinks that they can think outside of the box for themselves, they're going to try to stop that, so that people are only doing the things that pay them, right? That's it. So in terms of being traders or business people, they're the worst kinds that ever existed, okay? Because they don't care what people are thinking. They have no consideration about that. You're going to buy whatever it is that they're selling, and they're going to make, examples out of people, right? There's going to be a sacrifice. All right, a routine sacrifice, and their sacrifices are: you're either going to jail, you're you're exiled from the country. You can't go back in the country, or you can't go in there in the first place. You're going to get your hand cut off or something like that. You're going to get killed, right? They're going to execute you. You're going to get fined. You're going to lose your property, right? You're going to lose your business, your car, or whatever, all of that stuff. Well, they even whip you in public over there, so, you know, you could get a beat down, right? That's actually common, right? They may come and just beat you down, and you'll probably be broken for the rest of your life. You never know, right? There's all kinds of stuff that they'll do, right? They don't care about people. They care about them. Now, I understand that in some cases, people don't care about people that are outside of the government. And so, you know, per degree of their misbehavior or their bad wishes towards other people will be the response from an authority that is trying to keep an empire going where people are able to do business and things like what we do, right? Rather than it turn into basically lots and lots of little pockets of communist and Muslim governments everywhere trying to make up the laws, right? Trying to make us conform to their laws their way so that we can't do anything. And then all we're doing is living for them. What is that? That's not what we do. You know, and that happens here in our countries as well sometimes. Not as bad, but they do it. That happens here. If you've been around long enough and, you know, you've been around the block long enough, you know that that's the case. So this looks like it's about to break out right here. Okay, we've got the test lower. So basically, price came here, it bounced off a little bit, then it didn't continue down, right? So then it broke out, test a little bit lower here, and then we're knocking on the ceiling here. So that's about to break out, it appears. So I'm going to go ahead, I've got the dome up here on a different window. I'm going to go ahead and I'll go ahead and buy one. I need to check the NASDAQ really quick. Okay, so NASDAQ should be about the same, bullish or long inventory overnight. They got some selling here in the morning, so they came in the morning, they saw these prices were up high, so then they took profits. That was to be expected. And basically we got a swing low here, probably back down to the low overnight. Going to call this the swing high. Okay, looks like some consternation here. This is a double top, right? So we tested here again and they weren't there. Nobody was home. Okay, and then sold off here, but basically we are making a newer higher low. Now when I talk about all this stuff, and I'm just running through all these things without explaining it, like why was there a rejection here, what is a higher low here, I'm automatically assuming that you've watched enough classes that you know why there's a higher low here. You know why there's a double top here, right? So like, you know that the investors were interested here And then when we tried over the top, there was a bunch of sellers here, and there just wasn't enough buyers here. So, right. So basically, it would be kind of like, some people, they came on over to America. They were camel piss sellers, and so they started selling camel piss. They were buying it up here, and then they were hoping to make profits up here. But then when they opened up the door a couple months later, right, they had to sell off the store because nobody buys that here, right? Now, that's not everybody out there. Not everybody actually drinks camel piss, but there's people that actually do. This right here would have been a good trade. You can see this one. You can see that the candle wick, the tail, comes way down there. So basically, what it means is that what it means here is that price came down here, and then boom, it gets rejected, right? And then it comes down. It doesn't even get all the way down there, and then boom, it's kind of like if you were fishing, okay? And basically, if you were to, this happens, right? You get food down there, at a certain depth where the fish are, and they can see or smell, right? And then, boom, they hit the thing, right? And I don't know if you've ever fished before, but fish can hit your line, and hit it hard. I mean, right? So they just strike that thing, and then basically reel them up, right? And then you put the line down. This time you don't even have to put the bait down all the way back down. You get like halfway back down, and then boom, now because they're actually coming up higher, right? They don't even have to go as low because now they're interested and they're higher. And then the same thing, right? That's what these higher lows are about, right? You don't even have to go any lower. They're ready to bite right then. And so you see how big this strike was, right? And then you see this one's a pretty big strike right there, right? I'm really hating the equities markets. This is just insanity, really. This chart is just really insane charting. Look at this. What is going on here? Now here on the background is the S&P 500 E-mini. Yeah, I'm going to go ahead and get out of that trade. And keep my loss small. I don't see a lot of interest there. There may be some interest there, but I don't know. This pattern over here on the NASDAQ is horrible. I think that the equities, the equity investors, are very split on where things are to go, and basically, there's a lot of basically there's a lot of well, I don't know. Take a look here. This may be something right here. So if this gets rejected hard, then that trade on the S&P 500 may be a good trade. But this market is so screwy. Yeah, that's some good rejection of that lower price down there. So there may be buyers in there. I'm going to go ahead and put a buy order on the S&P 500. A couple of ticks over, I'll show you. A couple of ticks over resistance right here. So up here. So if that breaks out, then that'll be good. Basically, if you draw a resistance line right here, you know, then you plan on doing some business. Now that's a really good quick tail right there, right? The thing is turning out very well. That's something that you want to buy. Okay, well, I'm going to go ahead and buy that before it breaks out, hopefully. Yeah, so see. Okay, so I've got a trade on right there. On the NASDAQ, I've also got one on the S&P 500 E-mini. So we'll see if that takes off. Basically what you're expecting here is that the price will just basically bounce on this if it does test any lower. If it breaks lower than this, basically that's a failed breakout, right? And it's just more of this screwy trading pattern. So what you're wanting are the buyers to actually step up here. Now, it's almost 2 hours after the open, so the volume or the participation may not be there very well. And so basically, you know, in a weaker market, you might give the market a little bit more time to get its act together. So you might give this a couple more ticks down here below before seller or buyers start to step in and basically buy this up. I'm looking at oil over here at the same time. We had a breakout through here. And I was getting interested in selling this thing short because of the big breakout here. Generally what goes up must come down. I think if it breaks below right there, then the bullishness is out of it and people are going to take profits. So once they start taking profits, that move down, probably down to somewhere around here, should be a trade. Okay, so we got, this is a NASDAQ right here. So we got that bounce right on support line. Little test lower, no big deal. Sometimes that's what it takes. And we'll see if this thing doesn't fill this back in. And then what we're going to see is if this doesn't rally any higher. Right? See if it doesn't rally a little bit higher. We don't know. Now pay attention to this. This is a quick wick. Okay, that means that, you know, that kind of think of it like a bear claw pattern, right? If you go out in the woods, you'll see that the bears, they'll rip up a tree, the bark on a tree. Basically it says, we're working here, right? Stay back. This is the work zone. And okay, so basically this is like construction going on here, right? Or whatever. And there's your bear mark. Okay, so this may be a bad territory to be in a trade. Keep an eye on that. But this bull pattern right here, this is a quick tail, right? It's the same thing. So which one are you more scared of, this one or this one? Probably this one. And this one is close enough and big enough, along with this, right? And all of this, remember all of this? They were really hitting right there. Big strike up there. Got right here. Really big hit right there. Another big hit right there. So chances are we'll be able to at least fill this gap. Now once we get up here, we don't know. Now if you were a seller and you saw this pattern, what do you think you would do? Would you wait until price got up here to really start to sell into them? Or would you just sell into them right here and just knock this all off? Because this is actually not very strong. Prices are going to come down here and then you're selling down here. Wouldn't you rather be selling up here? Yeah. So if you're a seller, you would be letting this thing get all the way up there. But you also have to remember that when price gets up there, the people that are taking profits from this trade, and this trade, they're going to be sellers too. So they're going to flush the price down anyway. But if you're selling right here, then you're selling out all of the buyers anyway. So they're all going to be selling. They're not even going to stay in this trade, right? You're just going to hit a bunch of stops and then cause a bunch of selling. So you've got to figure out, what do you want to do? Do you want to sell up here or do you want to sell right here? For me, I would be selling up here. I might sell tiny little bit here, little bits, but for the most part I'd be selling up here, especially if I can get a breakout, right? If I can sell into that breakout, that's what I would be doing if I was on the other side of the market, right? But I'm a bull, so, and I'm not an institutional trader. So we get another little test lower down here. We'll see. This thing may get smacked down. So let's look at some other markets here. You know, I highly recommend that you have a heat map. The Jigsaw Trading one is $400 for a lifetime license. The Bookmap one is more advanced. It's $100 a month. I believe you can get a lifetime license for a few $1,000s. So the thing is, though, don't get the advanced stuff if you don't know how to make money with it. It would be kind of like if you were in some kind of contracting business and there was some equipment that you could get that was better equipment, therefore it was more expensive, but you don't even know how to use the cheap equipment. So but the thing is, you buy the expensive equipment that you don't know how to use, and then you're just losing that much more that much faster, so then you go out of business, right? Because you couldn't stay ahead of the cost of the more expensive equipment. But you can easily stay ahead of the cost of the cheaper equipment. Right, so you'll stay in business, longer. Then once you've got it down and you're savvy with it, then you can move up to the more expensive equipment, and then it's going to make you even more money, right? Which is the reason why it's more expensive, okay? Because they know that traders can make more money off of it, and they do, so they continue to buy, and therefore they can keep their prices high. But it's not like extremely high or anything. I mean, it would be like basically it's a lot cheaper than taxes. I can tell you that. Now you can still profit, right? You can still actually make money in the business, even though the taxes are high, right? So it's not even that expensive. It's not nearly as expensive as taxes. It's not even a penny on the dollar. Really. If you're good enough to buy that, then you've probably been trading the jigsaw trading heat map for long enough that you can be looks like the equities are not a good market to be in today. That's all there is to say about that. I am not playing equities, I will tell you that. Very disappointed. What am I thinking? Yeah, okay, so this was actually a lot bigger loss than what I should have allowed to happen. I mean, look at this. That right there, that's where I should have got out. So it should have been something more like not even a $50 loss, right? So that was my mistake. What is that price right there? 59.29.80. 59.29.80. Actually 59.29.75. So right, no way, really. Huh. Well, you can see price coming back there a little bit. I could have waited, but you never know. I mean, I've been in so many trades, so many bad trades where I'm waiting for price to come back. Sometimes they do, but when they don't, they basically ruin your whole day, and then you're out for the whole day. So sometimes it's just better to get out while you see it's down there, and then just trade, right? You can come back from a bad trade, but I should have put a stop up here. I should have been watching this, so when I saw that this thing made a little bounce right here, I mean, that's getting to my area where I'm like, okay, well, it's already broken support, and if they want to go lower than that, I think that they're going to have to perform a lot better than that, because this right here, this pattern right here, it's just so screwy that it's like you don't even want to mess with this market. It's like that white out pattern. You don't really want to mess with this storm. It's too screwy. So I'm done with I'm just done with the equities until they get their act together. I don't know what's going on there. I mean, it's a market thing where the large institutional traders are matter of fact about something. Okay, so it's long term. You know, it's not short term. It's long term. Short term is there just to, you know, go with whatever they're going with. But when they're on both sides of the market, they can't get their act together. You don't want to be there for that. You kind of want to be there when they are all on the same page. Like when they're all bullish, you know, then they all have the same routines, right? And so then we have the same routines. Very, very organized. When they're half bullish and they're half bearish, it's hell. It's hell. You don't want to be there for anything in that because as soon as you see a bullish pattern and you take it, what's going to happen? The other side of that thing, remember, these are enormous trains coming at each other. So as soon as they see that you're writing a bullish pattern, then the other side of them, right? It's like schizophrenia. The other side of that is just going to come and impact that bullish ride. And it's the same vice versa. If you're writing a bearish pattern, right? Schizophrenia, here come the bulls on the other side. Boom, it's going to knock it back out. And you don't know, I mean, you never know when you're on the wrong side for the most part, but you're reading the chart patterns and you're assuming that, you know, it's regular trading day. But in fact, it is not a regular trading day. The long-term investors don't have an act together yet. They are still splitting. Basically, they're feeling each other out, right? And a lot of that is feeling each other out. Okay, oil's much more interesting, I'll tell you that. So we got the breakout here. We got a little bounce here. It's getting kind of, you know, it's getting that time of day. I'm not assuming that this thing could keep on running higher. I am looking for a breakout here. I will put a order at I think 47.60 is good. Okay, now you see this, right? That's where I'm at. So I'm nearing basically where I get out. Okay. I'm also considering that I made a mistake where I didn't put a stop where I should have put a stop because I was talking and I'm going over these other things in the market. Okay, so with that considering that, I will give myself a little bit more leniency, right? Because it's not basically what I'm doing is actually giving the market more leniency. Right. So basically, I'm not gonna blame the markets on my mistake, right? So that's how that works. Now here's another thing right here, right? The heat map. Okay, so basically you see that pattern there on that chart right there, right? This one right here. See the breakout, okay? Now we're up here, okay? And that's what all this is. This is up there at the top. So this thing spiked again, and then basically it ran right into a bunch of sellers on the offer right there, and they collided, okay? And then they gave up. So basically, right there after that, the day traders, that were profiting on rising prices, they basically got taken out right there, okay? Because, you know, they were profiting. They need some liquidity to get out of the market and take profits. Well, there was their liquidity right there, so now they're basically out. I assume that they're out. They may break out again. I don't know. But now the thing is that is this. They may not be looking for higher prices, right? So if they're not looking for higher prices in order to get out of these long orders with profit, then of course this thing may just kind of fall off because there's nobody interested in buying. On the other hand, you need sellers to get the price to roll down, you know, and roll down significantly. And if they're already out right here, right, then you got a bunch of holders. So the downward price may not be that good. So then what you get is, if the sellers are already out, then what you get basically is just kind of a sideways trading, you know, little mini range here. So that's not good, right? Because you want a full movement here, right? In order to make money, you don't want the market to be stagnant and then sideways here. Now, is this not investable or what? Look at this. So basically you've got higher highs. You're back up here, right? I'd say it is. I'll go ahead and buy this. I'm buying the what do you know? The NASDAQ did break out up there. Huh. Yeah, I'm going to hold on to this. This looks like what it did yesterday. It was doing the exact same thing yesterday, and then it rallied up pretty high after that. Okay, look back at the NASDAQ. So what happened was, this is really goofy trading. Normally you don't get this whipsaw all over the place here. And I kind of thought this might be happening because of this quick tail right there. Right, basically it happened again. They hit right there. The bullfish hit right there. Came down here to the same area. Bullfish hit again. This time they couldn't even get down as low. Came up, tested down lower. This is a higher low. What does that mean? It means that you can't sell all the shorts right here, right? These prices right here, you couldn't sell these shorties. In order to sell them, you have to have them looking lower to profit, right? Because nobody gets into this position if they aren't expecting to profit down here in this position, right? So therefore that didn't work. But what did work was buyers were buying up here, holding on right here. They weren't selling right there. They were holding on right there, buying right here. Then you get this higher low. Now what are they doing? They're holding on and they're buying here because they are looking for higher prices up here. And if you look at this thing overall, what is all this? Higher low, higher low, higher low, higher low. You know. Now it's not a video game. It's just that's the crowd sentiment, right? As a business person, you got to read that kind of thing. You know, as a business person, basically what you are is you're a concert. Okay? Do you go on a stage and do you just, I mean, maybe some places you do spin around and you do break the equipment. I don't know. It depends on who they are, right? But the thing is, though, is for the most part, you're going on stage and you're figuring out what people want, and then you're going to stick to that. Okay, there is a limit to. I'm going to go ahead and buy that. Nasdaq looks pretty good. So there is a limit to what you can do on the stage, right? But basically it's all based on what everybody else wants. Not just you. Right? And so that's the whole thing, right? You're looking at a chart because you want to make profits, okay? But what do the people want? Okay? That's the main thing. So what do the people want? That's what you're reading here with these tools. What do the people not want? Basically, they don't want shorties right here, or what I call, short orders. I'm not saying shorties. You know what I mean, like the candies, right? Shorty candies. That's what I always say. Shorties and bullies. Shorties and bullies. Okay. So anyway, I'll come up with something else. But basically, shorts right here just aren't working. They don't want to sell those. They want to hold on and buy more. Okay. So shirts, right? The opposite of shorts, right? So those are buying, right? They're buying up here, buying up here. So basically, you as a manager got to say, okay, well, if that's what's hot, then I need to buy now. Okay. I got to buy. I got to invest in this now. That's what's hot. That's what you do. If you're a cover band, right, and people they like this one song, what do you got to do? You got to learn how to play that one song, right? So that way you can catch on with the trend quick enough in order to do what? To entertain those people with that one song, right? So what's the one song here? It's the bull song. Okay, so that's what that's all about. Okay, you're reading a crowd of people. You're not, this is not a calculator, okay? This is not astrophysics. Now, I admit, sometimes it's not perfect. Like, for instance, I gave up on equities here because it was getting kind of helter-skelter. Like, these patterns were kind of goofy, but if you look at it yesterday and you compare it to today, you can see that it's basically panning out the same way. Now you got gold. Let's take a look at the gold. Okay, so overnight looks like neutral overnight, so there's nothing big going on there. That's gonna be your swing high right there. This one's gonna be your swing low. That right there would be, well, you want to measure the resistance right there, okay. No. Okay, so measure support. It's going down. You want to measure support now. Is it going to bounce off support? Comes here, it bounces, gets checked right there. Does kind of test a little bit lower than support here, but eventually it breaks out. Okay, so this right here is buyable right here. Okay, and then I would take profits, and then I would look for a breakout up here. If I was trading this, I would put a buy order on the other side of this thing right here. and then catch a piece of that, and then look for what's going to happen. See if, basically what I would be looking for is for it to bounce off of this, price to bounce off this and go up there. Got to bounce off support and then continue higher. That's what I'm looking for. But that's not what it was doing. It actually broke through support, so that would have broken my trade. So that's why I don't hold on. And I just take profits. You know, I'll tell you what though. I'll tell you what. The equities market, you know, I was talking about it before. Well, it's kind of acting screwy again. I don't know. I gotta get this oil market back up. I don't know where my chart went. Okay, so there's that oil chart. Right. I've still got a stop order. I'm waiting for it to fail, and then sell down into me. So, but basically, then you start to pattern everything out here, right? Figure out where the support is at. So what happens here? We're bouncing. We're bouncing. We don't even get back up here to resistance, right? So you see all this gap right here? That is a lower high. That is, this gap right here says bearish. That's what it says. Right? Because you can't even get these sold to the bulls right here, right? The bulls are so frigid about this. Okay. They're not even gonna buy any of this, right? Which is unusual. So basically read that as very bearish. And then basically when you're starting to see this right here, okay, lower high, lower high, lower high, right? That's what you're selling, okay? And basically when it breaks through here, that's a trade, and you can grab one of those trades. But then you see it happen again, right? It peaks out. It tries to reverse right here. It peaks out. I would basically, what I would do is just to be on the safe side, I'd wait for it to break out and sell this right here. I'm not going to get this whole thing right here. I'm going to get this, some of this action right here, and then I'm out, right? And then I'm going to look for what it's going to do. Now, this is a reversal pattern, and I'll explain all this. First of all, you've got a lot of, this is a very, what I call a hot bar. So you got a ton of volume in one bar. Same as this one right here. So wherever volume is spiking in a trend, it tends to signal that that there's a reversal right there. Okay. And that's what's going on right there. So there's a lot of volume right there. The thing is, though, is that when you start to see that, then you've got to look for the pattern for it. First of all, if it's a bullish reversal, which this would indicate, then you're looking for a higher low, and that's what you get right here. Okay, and so we sunk below the swing low. It must be rejecting it. Now this is not for sure, because sometimes, right, we sink below a significant price area, bulls strike, and it's the same on the other side of the sheet at the top, okay? But you get into a certain area, and what happens? The volume kicks in because there's a lot of crowd there that is for, you know, whatever it is. They're for these prices. They're for buying this price area because it's a significant price area. What's the significance about it? Well, look, this is the swing low. This is the swing low. Okay, so you expect it to be there. Does it mean that they're going to champion it? I don't know, but it's significant. So basically, you're knowing there's a lot of votes to the bullish side. Okay. but they may lose, and it's also that time of day where they could easily lose. Now here's the thing. So you keep an eye on this, but this is your breakout point, right? So you got a little test here, okay, and it doesn't actually follow through. So there's a little bit of a fail there. Now, does it continue on down or does it continue on up? I don't know. In fact, I would probably put this trade right here 2 ticks on the outside above this, and probably just look for 10 ticks, 7 or 10 ticks. That's it. Don't go for home runs here or anything. Not that those are bad things, but basically, if you're a small time trader, right, you want to be able to snatch and go, because a lot of times what happens is if you're looking for big home run trades and you're not even snatching and going, you'll get the trade, it'll work, and then it'll reverse on you, right? And then it'll either reverse on you and it'll start going the other way completely, okay? And you'll lose, you'll get out of the trade, but then it turns around and continues going your way. So then you get back in the trade, and it's already too late by that time because you waited for confirmation that it was going that way, and so by the time you get into it, right, the price movement is already done. So what you do make is not the same. And you could have made a profit on that first move and a profit on the second move, right? Or what happens is you've got the move, the trade was right, you've got the money, okay? And then the price starts going against you, and you're thinking, well, it's just going to turn around and go my way. And then it doesn't, and it goes continuously against you because the whole market has reversed. And there you are holding this toxic trade. It's killing your entire account, right? And just over and over, there's only so many things that you can do in trading, okay? Only so many things, right? It's not an infinite amount of possibilities, right? It's kind of like, have you ever played a game, right? In games, there's only so many things that can happen. Even in driving, there's only so many things. There's only so many sides of the car. You can either get T-boned from the right, T-boned from the left, rear-ended, head-on impacted. You can get the corners, I guess. That could make it a little bit different. But basically, you can flip the car, and that's about it. You can't do anything else. You can't disappear and reappear, shape-shift. You can't shape-shift the roads and the rules of physics, and then all kinds of new combinations. No, there's only so many things you can do, and it's the same in trading. Well, it looks like our so this finally did fill in. This is NASDAQ right here. Okay. This finally did fill in. Okay. Actually, it tried to break out right there. And then it failed. Okay. So that's significant. Now, is that all she wrote? I don't know. I don't think so, actually. Look at this pattern right here. Okay. And the same thing is happening on the S&P 500. Okay. So this is actually the breakout right here. And it's still above that, right? So, so I'm going to go ahead and take profits on my S&P 500 E-mini, and then I'm just going to be in the NASDAQ. I actually traded both of those And I'll tell you what, the rules are that you don't trade the same direction in virtually the same market. Because that's not diversification. That's not diversification, right? That's just putting too much into one basket. Too many eggs in one basket will get your account smashed up, right? So I will be back shortly